In this video, traders, we'll look at how to discover new trading strategies. Stay tuned. Hey guys, a very warm welcome to you. Thank you for joining me. And if you're a long-term subscriber, I appreciate your support. All right, so how do we discover new trading strategies? So you've probably got a library of strategies that are working under certain conditions. Maybe they're not quite as powerful as you'd like. Maybe some just don't seem to be effective at all. So we need to know how we can discover new trading strategies for the market conditions. So the first thing really is to have a seed of an idea. Now you can find that seed, in my opinion, you can find that seed from one of two ways. One, you can have it from an existing strategy that's not quite there, but a few tweaks, a few adjustments, a few parameter changes will make it into a good strategy. Or the second seed is to be sitting, watching the market, observing the market, feeling the market, understanding what's going on, and then for you to come up with an idea and a strategy. You know, the strategy could be, hey, you know what, I recognize that actually we sometimes get a little bit of buying coming in the last hour of the day. How can I use that and see that and use that as a seed of an idea? Well, actually, if we're here at this level, if we're at this and we see this pattern, then I'm going to buy and put my stop here. There's your strategy. You know, if we're going back to the initial example, you've got a strategy that's working. Let's say you're trying to buy a pullback on a trend and it's just not quite working, but you know really in your heart, if you like, for want of a better word, that buying a pullback in a trend is great. You know that because you've seen it with evidence of your own eyes. You have to look at a chart, you can see, but it's timing it. So you then go into more of a complex analysis and go, right, well, how can I time this pullback on a trend? You know, do I need an indicator for this? Now, I'm cautious about diving straight for indicators because I feel they can cloud your judgment, they can ruin your feel for the market. However, I'm not against them and I use a couple of them from time to time in certain strategies because they're good to be able to quantify the move. So you start to look and you go, well, how do I get on the end of this pullback? So there's two things I want to get right. I don't want to do with this pullback. I don't want to get in too early and I want to make sure that I'm not chasing it. So you're trying to find that sweet spot. So then you go, right, well, what do I need to stop myself getting in too early? Well, I could do with something that judges the length of the pullback or allows that spring to stretch. Maybe I want to use an indicator that starts to go into an oversold territory on a lower time frame, or maybe I want to draw a trend line, or maybe I want to wait for it to come and kiss a moving average or something. So you start to then go, right, well, that stops that part of me getting it wrong, getting too early. Okay, well, how do I stop chasing it? Well, you know, maybe I make sure I don't go in if I'm more than 10% or from the high or whatever it may be. So now you start to add some parameters and you go, okay, well, where's my risk going to be? How do I quantify my risk? And that to me is the key of any strategy. When there's a defined place for a stop, like if you're trading a double top, for example, fake out, you're above the high. If you're trading a pullback after it breaks the high, then it's below that pullback low. You know, those are very easy places to have a stop. So once you've got an idea and a theme, you're working out how best to get involved with the trade, and then you're working out, okay, where's my stop loss going to be? And so often that's the case to start off with moving backwards. For example, if you look at, say, the open, I trade the open, very volatile, loads of opportunity, but it's hard sometimes to place a stop to quantify your risk. You know, if you catch the low, then great, you get a very quick move, but often it's very tricky to find where it's going to turn. And so that's not a great place to start with a strategy. It's a challenge, it's a conundrum, but you go, okay, well, only if I get this type of thing, like a bottom that's faked out within the first 15 minutes, will I take it, etc., etc. So you start to build very strict criteria. So the summary is, guys, is that when you're trying to discover a new trading strategy, trust your instinct as to where you should look. I know it sounds flaky, but believe me, if you have been involved with the markets, you will know really where the next strategy needs to be. Do I need to be focusing on mean reversion? Am I seeing lots of fake outs at the moment? Am I seeing lots of good trend breakouts? What is my gut telling me? And be instinctive and write down and say, right, okay, well, I need to find a mean reversion strategy. Does the seed for that come from strategies I've got already? Do I have any mean reversion strategies already? Are they working effectively? If they're not, how can I adjust and tweak them? If I don't, What am I noticing in the market I'm trading? Am I noticing breakouts from highs that fail? Am I noticing breakouts from ranges that fail? What am I noticing? And then again, intuition, instinct, write that down. And then you can start to go down and use some kind of logical explanation for it and logical reasons to get into the trade. Well, if I see that this is broken, this level's come back, then I'm going to do this. If I see that this is okay, and then you can go, right, well, what indicator can I potentially use to help me identify that? Well, actually, maybe an oscillator would help for that, or maybe a moving average would help for that, or maybe a Bollinger Band would help for that. So you start to add, stack layers and layers on rather than getting confused and going in straight away. And as I said it before, I think you have to rely on your own observation of the market, because by the way, there's loads of things that you can look at to kind of get some inspiration and use and work from yourself. But I also think that when you're developing your own, you have to feel inspired to do the strategy. You have to have seen it and gone, if I can find a way of catching that reversal, I know it's going to be good, because then you're passionate for it. Then when it's working, you're going to hold it to the limits, to the actual price targets. You're going to follow the strategy, you're going to want to work on the strategy, and it's going to fit in with your personality, because everything's going to be lined up for you to focus on it. The trouble is when you get a strategy that you don't really like, you don't really trust, you don't really execute it correctly. And so allowing yourself to look at the markets, look at the market you're trading, decide on what's happening, and then build a strategy from around that before you get too clinical with it really, really helps. And don't forget, guys, you can keep a strategy relatively broad. As long as your risk is defined, you can keep it quite broad. You can go, listen, I'm going to buy a pullback of X ticks when I think we're in an uptrend. Very simple strategy, very effective, can be. And then you just keep it broad, but as long as I have an X tick stop and an X tick target, and then build from that. Once the risk is quantified and in place, things become easier and simpler. So discover new trading strategies, guys. This is perhaps a different video to you were expecting, but I really think that this is the better way of doing it, using your intuition with the market, just going where you want to go and how you feel you want to trade, and then looking deeply at the kind of nuance effect of it and the numbers and all the stuff behind it. All right, guys, take care. Keep your risk management. Whatever you do, that's the secret. Bye-bye.